Hello guys, welcome to Daily Market Review. Today's date is October 21st. So today we had a large range day. Technically the price went down. Let me see. So it wicked down 150 points and then closed green. Basically rallied to the upside another 200 or so points. The main thing I'm going to be talking about this today's price action is, first of all, the overblock mean threshold on the daily, and then Friday's high essentially. That's time-based liquidity. I just want to showcase the importance of these two levels on the 1 minute, on the 15 minute. Let's take a look at it on the 15 minute first. So as you guys can see here, we had equal highs. Basically Friday's high was left equal highs during the overnight session, Asia and London. Thus the moment the market opened, the equity opened, it rallied all the way up to the mean threshold of the daily candle, and it basically purged Friday's high, basically turtle soup here, and then dumped all the way down to the sell side. Couldn't engage with the sell side, but here's what I was thinking when I annotated, or when I alerted a short trade today. So I was looking at the equal lows here, relatively equal lows. I thought because it purged the Friday's high, could go for the equal lows and clear that, but it didn't happen. It essentially formed an S&T divergence here with a yes, and bullish S&T divergence there, and violated the range equilibrium during PM session. Once this candle closed, basically displaced to the upside here, I lost my interest in shorts and called it a day essentially. So now since this is done, and let me drop down to the 1 minute. Actually, let me go to the continuous contracts here, as I have some annotations. So this is Friday's high. Okay, this is equal lows I mentioned earlier. So initially it pumped all the way up. Here is the 930 candle right there. Price displaced, and then basically rated the 930 low into a fair value gap, and then rallied. Another BC here, and along with open range gap CE, dropped down there and then rallied more, closed all the way up to the open range gap high right here, but there's another displacement here, and that displacement never failed. Thus it pumped one more time and basically purged the equal highs, Friday's high, and I thought this could be a manipulation, and market could reprice all the way down to the equal lows. Didn't happen, but I'll read the order flow. So here another BC, price dropped down, pump one more time. Now we have a short-term buy side purge at the buy side. Liquid sweep lower time frame. All right, short-term buy side purge over here, and price displaced lower after all. So it formed a BPR here along with SIBI. So we have this as a breakaway gap, okay, and then we have this fair value gap, and then we have this fair value gap on the lower side. Basically price went up to the lower portion of the latest fair value gap. This is also inversion fair value gap. It tapped into the lower portion and sold off very, very sharply here until it got down into the opening range gap low, or 930 low. Essentially it just wicked below and then repriced or retraded into the SIBI and dropped further. We have new CB here along with an order block. So anything above this order block here at this point has to be a breakaway, so price shouldn't violate that high essentially. So we have this fair value gap or SIBI, we have this SIBI, basically retraced all the way up to the upper portion, not upper portion but the upper fair value gap, closed it all the way. This should be an SMT divergence, frankly. Let me see. I want to see it on ES. Oh, that's an ugly looking chart. I need to clean the chart. Let me see. Alright, right there. So we have equal highs on ES and a higher high on Nasdaq, which is a bearish SMT divergence. The reason I thought there is a bearish SMT divergence here is mainly because of the fact that it is rating above the short-term buy side and retracing deeper than it should, because it really should technically use the lower fair value gap to keep going lower, but it didn't. Instead, it formed a high, formed a low, ran the high, and then dumped. Okay. Here's the clue. Also, we have equal lows here, and this is the fair value gap IFED'd. Okay, there's the IFED. That's another entry, and price came all the way down to the south side. It did not engage with the south side, unfortunately. It basically rejected off of the CE. Yes, purged the south side though, so thus this is an SMT divergence, and it formed a V shape here. Now it's in changed the state of the delivery from the BISI rather. Once it does that, the thing I'm looking for is basically where the equal high is resting. Okay, then I go step by step. So this all bearish SMT is now equal highs. This is the highest probability target, and then we have also this minor buy side along with a large fair value gap in discount, which is what I mentioned, the range EQ from the morning high all the way down here. This is the premium fair value gap. So that was the target for this buy model. So here, south side purged, displacement to the upside, price came down to this BISI, popped one more time. Now we have this latest BISI along with this breaker block right here, confirming the order block, confirming the order flow. Then price basically essentially kept pressing higher, cleared the equal highs, and then traded all the way up into the premium portion of the latest south side the latest south side curve. So here, this is where I was watching price. Let me zoom in. This is very important in my opinion. So first things first, we are inside the opening range gap. Okay, we are staying below the open range gap CE, which is good for south side, indicating weakness. It started accumulating here. Okay, formed equal highs. That's not an SMT divergence, and then here it formed equal lows. Okay, this is an accumulation. Okay, then here what it did was it rated the south side or equal lows first. So remember the context: when you have equal highs and equal lows, wait for one side and then fade out move. So here it came down to rate the equal lows, displaced. That displacement is the confirmation. In fact, there's a volume balance. I need to take that. So the displacement, the BCCE price displaced to the upside, cleared the equal highs and kept pressing higher. We have some sort of manipulation here. So let me read that actually. So we have this BC and the lower one here. I'm not gonna annotate the lower one, but here's what I'm gonna tell you guys. So we have this BC price turtle soup, the low inside the BC. This is very important, and bodies were staying above the CE. Thus it pumped one more time. At this point I was not interested in short because the equal high raid here, this candle, shouldn't have popped. Instead it popped, so I just let it go, off the idea of double purge here. So here rallied, now it formed a new range right there. So it sharply reversed here with the displacement. This is very tricky, because if it was still inside the range EQ right here and was doing this kind of thing instead of here, if we saw this price action here instead, then I would have considered this SIBI as a short, but because it popped, that means price is willing to go higher. So here it manipulates below the old lows, does more damage, and breakaway gap here, and displacement, no displacement but slow grind up into the second target objective. So this is the second stage reaccumulation, very slow grind though. Then initially open range gap CE, open range gap high, got rejected here, price displaced to the downside. This is the displacement, and there's another displacement here. I need to annotate that. The first one failed. It went deeper into the rejection block here, formed a bearish SMT there, and displaced one more time. So there's a displacement right here. That displacement, let me zoom in so you guys can see that. Oh, actually that's not a displacement, my bad. It was basically using the old SIBI. CE formed the bearish SMT, displaced lower. Within that displacement we have the SIBI here, formed equal highs, but after all it dumped, cleared the sell side, kept going lower, cleared another sell side here. Let me annotate this though. I'm not going to annotate the fair value up there because it's kind of pointless. It came for the bearish order block. Anything above this candle here should be breakaway. So it came all the way up to the bearish order block and purged the sell side one more time. I think this was a bullish SMT if I'm not mistaken, maybe on the higher time frame. Let me see. No, there's no bullish SMT unfortunately there. It just displaced to the upside, cleared the old equal highs now. So we have this equal high here. It cleared that without giving any entries. So every BC ended up being breakaway gap, which indicates strength in the market. Now we have these equal highs, right? Basically formed a new first leg here. It's mean threshold, not mean threshold, I'm sorry, range equilibrium. Let me annotate this as equal highs. Formed a trap here, so this inversion is the trap because price is accumulating right below it. Price used that trap fair value gap is what I call it at 3:47 p.m. Also note that this candle doesn't have any sell side manipulation or sell side wick. It basically offered sell side. Now this area is efficiently delivered, thus it pumped and cleared these highs and kept pressing higher throughout the market close. So here, this price action, if you ask me what it's reaching for, here's what my answer would be. You see this price action here? It's essentially grinding lower without a major structure. So if you go down to 30-second or 15-second here, so I'm talking about this price action here. If you go on the sub-second charts, 15 seconds or 30 seconds, this is essentially a trend line, quote unquote, liquidity. So the buy side of that trend line here acted as a draw on liquidity, and the last 10 minutes of the market close, price was essentially trying to reach for that liquidity, and then it closed. The market was closed. So it was clean sell side delivery, very clean. I wish I saw this price action at the time. Then once it flipped this range equilibrium from the morning session, it basically went for the highs. So let me go on the 4-hourly real quick, just because that's our main framework. We are still at the range EQ. We had basically a strong close. I'm watching the wick from Thursday, and it's in its quadrants essentially, to see how price reacts off of this level here. I'm kind of neutral in terms of bias though. For now, it could, like I said, it could easily go for equal lows, it could easily go for equal highs, so I'm staying neutral here. On ES, let me see, ES purged the sell side already, so we have a higher time frame bullish SMT divergence here. This might send it higher, guys, but we'll see what it happens. So far it looks like she wants higher prices. Maybe these equal highs will get tagged not tomorrow or maybe tomorrow or Thursday. We'll see. Yeah, the XY popped essentially. Wow, the XY looks bullish, huh? This should be bearish for an indices, but I don't believe the correlation between the two. So yeah, hope you guys find this insightful, guys. The most important aspect of this whole price action is the initial sell-off, then this pullback here, this one, and equal highs, equal lows. Basically, it's not a double purge. I don't have a name for this, but like market basically building up liquidity on both sides and runs on one side and fades it all. That gives a narrative, and that gives bias as well. Because if it went for the equal highs first, then we would have seen new low of the day. It didn't do that. Instead, it went for the equal lows first. Thus, we saw new highs. Okay, very important. Study this. This is very, very, very important, guys. But anyways, hope you guys find this insightful. I'll talk to you tomorrow, hopefully. Have a great day. Stay safe, and see ya.